I'm Charlotte McLeod with investingnews.com, and here today with me is Willem Middelkoop, founder of Commodity Discovery Fund. Thank you so much for being here.
Nice to be back.
Yes, really good to be catching up with you here at PDAC. Exciting time already.
Every year here.
We do. We seem to meet here. We've made it to day 2 of the convention, so I feel like I can ask you, what is your sense of sentiment here, the vibe maybe on the show floor?
Well, actually, it's a two-side market. The producers, the gold producers, I had 2 conferences back to back. I'm just returned from Miami, where I was at the BMO conference. That's a larger conference, focusing more on the producers. The producers have a license to print money now. They're very happy, have huge free cash flow, have huge profits. But when you look at the juniors, there's more like an explorer, geologist, junior conference. And if you look at the juniors, most of them are still trying to survive, actually. And we still invest in great companies making good discoveries, and where the ounces in the ground are valued as low as $7 per ounce, while an ounce above ground is worth almost 3,000 ounces. So it's a bit of a strange market, but I think the bull market has started, and you see more happy faces.
Well, let's hope so, certainly. I think you hit right away on that disconnect, right? Where the large companies very happy, the juniors, I know, not so happy. Do we just need to be patient and wait for that to play out? Okay.
Yeah, but this time, if you compare to previous cycles, I've been in the industry now for 20 years. We were used to have more like V-shaped recoveries. And this is more like a U-shaped recovery. It takes long. But in the end, you can't ignore when gold is trading at $3,000 per ounce, close to. You can't ignore that the value of ounces in the ground, it should go up, and it will take maybe a few more quarters, and then the generalist investors will see what the amount of free cash flow is, how much money is being made into the space. Some investors who are heavily involved with tech we'll see a sector rotation maybe. Tech is topping out. And I think this will be a very long bull market, but it may take a bit of time. Bull market has to climb a wall of worry, they often say. So it may take another few months or quarters, but then everybody wants to get in.
Yeah, I think we can all feel that as you're mentioning, for sure. So, but bullish on gold and the large miners doing well. You focus on discoveries. Are you skewing toward gold and precious metals in this environment, or how is that breakdown?
Well, the start of our fund, actually we were called the Gold Discovery Fund. We later changed that to the Commodity Discovery Fund, because we don't care where the large discoveries are being made. Could be uranium, could be copper. But we always had over 50% of our exposure in gold and over 60% in precious metals. We're increasing that a bit. So we go towards 75-80% maybe precious metals, because it is the strongest market out there. But look at copper, is still strong. Look at uranium, is still strong. So we also want to keep exposure to these markets. But we're very happy with the current portfolio. And we changed our investment strategy a bit. We used to have too many names in our portfolio, and now our top 40 is 80% of our portfolio. And that's really, we focus on the largest undeveloped mining projects, mining discoveries worldwide, and almost metal agnostic.
Yeah, I think that makes a lot of sense. Yeah. So good to go into that. Let's take a look at gold, because we haven't talked for about a year, which means that at that time we were still just beginning this run in gold, and people were wondering, is this real? What's going on? So of course we've seen gold get past 2,900. We pulled back a little right at this moment. But what are the main factors you're looking at as gold?
Well, you always have the gold funds and the gold bucks who always buy in gold. But what's more important for the general gold market is, what do the general investors do? What do the sovereign investors do? What do the central banks do? And when central banks are starting to flee towards gold, which has been happening in the last 3 years, that's very telling, because these are the guys who are allowed to print money. So if they start to buy gold, that's a sign. And institutional investors only buy gold when there's a smell of war in the air, when there's a smell of chaos. And there's a lot of chaos. There's a lot of madness. Look what's happening coming from the White House on a daily basis. So expect more chaos, expect more flight to gold. And when I just was present at the keynote of Eric Sprott, a well-known investor in our space, Canadian billionaire, he said when they start to open up Fort Knox, a lot of eyes will be opened. So I think he's right. I think the U.S. has played a great number of tricks to keep the gold price, well, managed to avoid a gold price explosion. But we might get that gold price explosion now because there's an awful lot going on. And
Yeah, there is a whole lot going on right now. And maybe we talk a little bit more about this Fort Knox situation, which is very interesting. I know Trump and Elon Musk, they are saying a lot of things. They're going in a lot of directions. Why are they going in this Fort Knox direction right now? Are they signaling that they really do care about this?
This is a president who has campaigned for a few things: draining the swamp, getting rid of the corruption, but also he's in favor of great transparency, and so is Elon Musk. And when you say transparency, it reminds me actually about Gorbachev, the former Russian president who started his glasnost, which was also about openness and transparency. It took Gorbachev to open up that closed Soviet system. It took him a few years, but 6 years later it collapsed because that system couldn't stand transparency. And I'm a bit afraid that the US system might get very unstable because of too much transparency. So when you open up the vaults and you find maybe it's not there, or it's not all there, or the quality is different, people might start to lose trust in the financial system, in the dollar. So be careful what kind of worms you're opening up.
Yeah, that could get very interesting and certainly very unstable. I know you're following on closely with what Trump is doing, and there's a lot of elements to follow there. You know, you started to talk about the efficiency measures and things like that. What is your take on how well that's going?
Well, I think it's like the same story there. It's very good that some light is shed on the waste and fraud, which is obviously is there. But when you do it in such a drastic and dramatic way, there's a risk things get unstable. And this is Elon Musk, you know. This is his approach. This is what he has done with Twitter. You just go in and you throw everybody out and then you start building again. But a government isn't a company. So if you do that with a government, there's now talk about maybe closing down 120 offices of the IRS, you know. First study it, make a plan, and then execute a plan. So there's a lot of risk involved with the current form of action. And that's bothering me a bit.
Yeah, I want to ask about the tariffs as well, although I know there's been a lot of back and forth and uncertainty as well around the tariff situation. How do you see that playing out, keeping in mind that it does keep?
I think the tariffs is just a way to start negotiations. Yeah, and then you can skip the tariffs because tariffs are jacking up prices as well, and I think we might see a return of inflation. I'm from the Netherlands. We just today had our new inflation number. It's already 3.8%. It's almost 4%. So we could have this pickup in inflation worldwide to see a second wave of inflation, maybe an even stronger wave. So that's risky. So I'm not that worried about tariffs, but it might cause a recession because the economy is quite fragile and tariffs don't help it.
I know from following you on your Twitter account, you're following Trump's activities very closely. So any further thoughts on the U.S. economy under this new Trump administration?
Well, that's the problem for him. He started in January with an American economy who's already slowing down, and I think we're already in recession. And I'm afraid that the way he is cutting budgets, and because of all the drastic Dodge actions, it sure will be in a recession, a severe recession, very soon. And that's his largest risk.
Yeah, I can see what you mean. And I also want to ask you what's going on with the BRICS. I know you mentioned you're not too concerned about the tariffs. We have had Trump say he's looking at 100% tariffs on the BRICS. They've been very concerned with their de-dollarization efforts, and I know a lot of people in the sector follow that with regard to gold. So where are the BRICS in all of this?
I've been speaking and writing about the BRICS and the power of the BRICS and the development of this alliance since at least 2016, when I revised the Big Reset, which can be downloaded for free at our website for people who are interested. And first, people criticized me. And even Mark Rutte, he used to be prime minister in the Netherlands, and he said the BRICS is just they just talk. We don't have to take that serious. Well, when you start to have tariffs of 100% against the BRICS countries, you take them very serious. So this shows to me that the US is afraid of the BRICS alliance, and he should be afraid of the BRICS alliance. But when you start to punish them and threaten them with 100% tariffs, that's a sign of weakness. That's not a sign of strength. Actually, that shows you're losing, and you have to become a bully. It's bully politics, and the more politics you are using, the more countries like the one who are in the BRICS alliance understand they have to move away from the dollar. They need to hedge. They know the US is weak, and the US is showing it with its actions. So the BRICS alliance is very powerful, in my opinion. It's only starting. China is leading this, but it won't go away. It will get stronger.
Yeah, really, really interesting that what was intended to be that show of strength ends up being something completely different. So thanks for going into that one. Anything further you would say about the BRICS? I know this is a complex situation, but if there's any other dynamics there that you're watching or developments that you're looking there.
Well, we came from this globalized world at the end of the late 80s, where communism collapsed and we all started to live together happily on this planet. But now we have seen an end of this trend towards more globalization, and now we have this bifurcation of the world economy, and we treat China as our enemy. I don't think China is an enemy. Maybe China is an enemy to the US dollar system, which makes China an enemy from the American point of view. But I always say in Europe, China is not our enemy. China has been around for 10,000 years. China never conquered Europe. We in Europe shouldn't be like a vassal state of the US. We should have our own policy. And what's happening now with Trump threatening to leave NATO, actually for Europe, for us in Europe, that's a good thing, because finally we have to start thinking about our own policy and not just follow the US. So there's a lot going on. There are many moving parts. Actually, you could say the Big Reset has started. It also reminds me of Neil Howe's book, The Fourth Turning. Every 80 years you get a new system. It's right 80 years after 1945, which was the end of the Second World War, which was the start of the dollar system and the dollar hegemony. So we're in for a large change, and we're getting it now. And let's hope we survive without too much chaos.
let's hope for that. And on that note, so we've talked about your approach with the fund looking for discoveries, but there's so much going on in the world. We've only talked about a very small part of all this chaos. What other things can investors do to be prepared for this?
Well, when I give presentations, I always give them 4 reasons why commodities will do very well. And one is the geopolitical side, the other is the monetary side, the debasement of currency. You have ongoing inflation, I think, which will come back. But then, if you forget all these monetary, geopolitical reasons, just look at supply and demand. We entered the era of shortages. And that's the main reason you should position yourself as an investor in towards commodities. And gold is only part of that picture. But if you study uranium, if you study copper, Robert Friedland gave a keynote speech in Miami, and he said we need to find 6 Escondidas, which is the largest open pit copper mine in the world. We need to find 6 of those, or even open 6 of those every year, to be able to have enough copper for the next 25 years. So commodities are valued at such, rock bottom prices. And with everything ongoing now and the era of shortages arriving, we should do very well. We survived the downturn. We started our fund at the top of the last cycle. We survived the downturn and will do very well in the bull market. And that bull market, which is starting now, might take decades
to complete.
Yeah.
Yes.
Yeah.
So just a small follow-up here. So we've got gold, copper, uranium. These are the 3 that I think you've mentioned in this conversation. Are those your top 3 when it comes to commodities?
Then you have some battery metals like lithium. Lithium is a difficult market, but demand for lithium. If you study lithium, what always strikes me, 10 years ago, 50 years ago, lithium was a 5 billion yearly market, the value of all metal traded. This will grow towards 100 billion, maybe 200 billion a year, because lithium is the lightest metal, is used in almost every battery, and that will continue to be so. So we'll need dozens of new lithium mines. And that's why we study it quite a bit. It's a difficult market to invest because it's just like Bitcoin. It has these huge boom and bust cycles. But it's important for us as investors.
Okay, really, really good to go through all this with you. And I will let you go back onto the floor here. There's lots to do and see. Any final thoughts you would leave investors with?
Well, we didn't touch on silver.
Please, yes, please go for it.
I know people like to hear about silver. Silver is my largest position, physical silver. I fully agree with Eric Sprott, who's a silver buck and who has made clear in the last 20 years that the amount of silver which has been sold in paper isn't backed by physical. So if we get more and more eyes on the Fort Knox story, if we get more and more eyes on the story, if there's enough precious metals to back all these paper claims, this could get explosive, and you could see $100 silver in a few days. And I don't think it will stop there. And within the next decade, we'll see silver prices way over $100 per ounce. And so if you're looking for something, not to speculate, but to secure your pension, your old age, buy physical, put it away.
Good to get your outlook there. I know silver has been a frustrating one for many people.
But
so if
one day it will run, and if you're not in it, you won't win it, because the market will close down very rapidly.
Right, so you got to be in before.
Be in it to win it. And that's why I think that shares which have exposure to gold or silver will do very well in the end, because I had a billion web store for years. I started in 2008 in the Netherlands, sold in 2011. So I know that part of the business. If there's a jump in demand, that window to get the physical stuff will close very soon. And what can you do then is buy the ETFs or the shares. So that will happen one day.
One day. Okay, we will wait for that day for silver. But thank you so much. This was really good. Very good to have you. And once again, I'm Charlotte McLeod with investingnews.com, and this is Willem Middelkoop with Commodity Discovery Fund.